going on, everybody? Happy Tuesday. Hope everybody had a good weekend. And hope everybody had a fantastic day. So let's go into it. Markets are still totally range bound. I still think Dow looks really good. Really, really good. Well, looks better than the others. So I went long Dow today. It meets most of my criteria. The stochastic needs to be around 40. Now I've waited and waited. It's bounced off this 21-day moving average, 50-day moving average. It had a nice follow-through day after bounce out the 50-day moving average coming through the 21-day EMA. So anyways, towards the end of the day today, and yes, the CPI is coming out tomorrow. But I typically don't let events dictate what I'm going to do. Now we'll see what tomorrow brings and what the rest of the week brings. I particularly think this week is very important. I think I've been saying that for a long time, but man, markets just continue to be range bound, so something's going to give at some point. So whatever direction that is, I think is very important. So those are April 17 as the expiration, $445 strike price. Those are calls. I don't know if I said that. 1085. This is what I paid for them. Those are currently 1095. And I went long these really honestly at the end of the day. All in here. Just super strong in the middle of the day, and I've been looking for a good entry spot for Dow, so we'll see if this plays out now. Risking a few points for maybe 10, so that's how I'm looking at this. But like I said, we'll see how this plays out here by the end of the week. The 21-day moving average could be a pretty good guidepost, 442-ish. Yeah, I think that would be probably pretty good. And then 455-ish on the upside. All right. And CPI tomorrow, but like I said, we'll see what happens at the end of the week. Oftentimes, I don't even really care necessarily, what's happening. I do, in terms of events, I do for any day trades, I certainly do. But any swing positions or longer term positions, I really don't care for the most part. So let's look at some things. So United Health looks okay. Well, it doesn't look good. But I don't know. Ooh. Yeah, I don't know. Let's see how financials are looking. They're looking all right. Not great, but again, these are looking stronger than basically any other sector. So, all right. And then NASDAQ, so I'm still in these, which is the TQQQ position. These are calls. March 21st is the expiration, $81 strike price. 775 is what I paid for them. Those are currently 830, so those are working out okay. Today was a decently strong day. There is so much consolidation here. It's just a time to chill and preserve that mental capital like I've been talking about for a month. I feel like, I don't know what else there is to say or do. I'm just not really trying for too much. Just chilling. So, yeah, NASDAQ still looks okay. We're going to go over Mag 7 later. I think some individual names certainly look not good, but in terms of the index itself, I don't know. This is okay. This is some sort of consolidation that's going to happen, that is happening. So whatever direction, man, this has been since December, This is a long, long time. 2 months. So whatever direction we're headed, I think is probably very important. So yeah, yeah, we'll see. At the end of this week, I think will definitely be a good telltale sign here. And then this whole area, if it is gonna break out above this range, yes, I would be getting out around this area, maybe out of some of them, around this area as well. But that'll be a confirmed a new uptrend for me. So that's just how I'm looking at this. All right. XLU utilities are working good, and around this $80 I'll get out. For this time, we'll see if a new uptrend is going to be formed, and then on a pullback, I'll get back into these because this still looks good. Let's see this on a weekly chart. I don't know. That weekly chart doesn't mean that doesn't look anything to me. Okay, so March 21st is the expiration. $78 strike price. $2.45. Yeah, that sounds about right and sort of looks right. With my handwriting. $2.45 is what I paid for those. It's currently $2.70. And right around this $80 price target, those calls will be maybe $2.90-ish, $2.95. Something like that. $2.90, $2.95. So that's going to be my first price target. And who knows, maybe even tomorrow I'll just blast these out, whether this can get to 80 or not. We'll see. And then the last one is nukes, and down 2.5% today, but yeah, I wouldn't have expected this to keep going higher. As a matter of fact, I've been pleasantly surprised with a decent amount of strength in here, but you can tell there has been a lot of selling in here. It's kind of worrisome, but not really. I mean, that's what you would expect, right? I mean, this whole gap, so lots of people looking to get out in this whole area. And that's what's happening. You can tell because of the volume. So you have heavy volume on yesterday, and basically no price movement really. So lots of selling, and then same thing in here too. Pretty heavy volume that got sold off. So that's how you can tell. Now nukes, I still like this. I would love to hold this for a couple years. So yeah, I think that's probably what I'll do. The average cost on these is $47.44. Up there, $50.23. So that's working out nicely. So moving on. So that's it. That's it for the positions. Yeah, just like I've been saying for a month, this is just a time to chill. Maybe 2 months at this point. No, that's not true. At least a month I've been saying, like, just chill. And so that's what I've been doing. Now let's go over, we went over NASDAQ, I think it looks okay. We went over Dow, I think Dow looks the best. I think SPY looks really good as well. For what it's worth. Well, let's put it this way. I don't think it looks bad. Like I've been saying, this is a consolidation. We'll see if this breaks down or if it doesn't break down. As of now, it's okay. The bull market's still intact. But this is certainly no go for getting aggressive. But, sort of kind of poking and prodding certainly is okay. And that's kind of what I've been doing. And so SPY looks pretty good. You know, it's kind of crazy to think. I mean, SPY's like the same since November or something. What is this? Yeah, since November. Yeah, or maybe December 4th. Whatever. So shoot, yeah. Russell, I took a loss on these debit spreads. Um, on this day, whatever this day was, the 7th. What was that? Probably Thursday, Wednesday, something like that. And again, I mean, this has been really indicative of the last 2 months where, you know, things have failed. And that's okay. I jumped the gun on this one anyways. So during, you know, like a raging bull market and an uptrend, I would have gotten bailed out on that and it would have worked out just fine. Being aggressive would actually be the play, like I did. You know, as soon as it was over that 50-day moving average, and that was my plan anyway. So I did trade my plan, gave it time to work out. You know, cut my losses, and so like I said, it's kind of been indicative of this market where things are certainly failing. And if this profession was easy, everybody would be doing it, right? So Russell certainly looks the weakest by far. It would be kind of a bummer if this was it for the bull market for Russell. Reaches a new all-time high after like 7,000 years, and then since before the pyramids were built, Russell hasn't made a new high. So, all right, now let's go over some Mag 7 here, and then maybe we'll go over some financials. Man, JP Morgan's up 1.5%. Wow. Berkshire Hathaway. Yeah, it's really interesting. I mean, financials are the strongest sector, I think. I don't know. Maybe there's other sectors where you could say strong. Maybe gold, right? But anyways, in terms of equities, financials are certainly still up there. So let's go over some Mag 7. So Apple is whatever. I don't know. You know, it's interesting on earnings how it just got absolutely booted. There's been lots of selling in here. The short coverings did not sustain any sort of rally after earnings. So, you know, that's interesting. Not a good sign, but in terms of technical analysis, this is still, you know, okay. It's number one is Apple. Number two, it's in an uptrend. And number three, it's the 200-day moving average is still moving up. So, you know, holy moly, there's a huge gap to fill down here. You know, the saying, all gaps get filled. So at some point, this will be filled. Wow, that's a pretty big drop. But anyways, as of now, this is okay for my style. This is a no-go below the 50-day moving average like this, and especially the poor reaction after earnings and all this sort of stuff. That to me is a no-go. But in terms of any sort of like real long-term equity position, it's whatever. Okay, so there's Apple. Now let's look at Amazon. I haven't looked at this since I think last week or something, but yeah, so, you know, with swing trading, that's why it's really important in options trading to have a price target and get out at that price target and not care. You know, I know that's easier said than done, and I've been on so many different positions where it hits my price target, I get out, and it rockets higher. Gold, perfect example of that. And that's okay, right? It hits your price target, you make money, you get out, and if it rockets higher, and that's totally fine. That's, for me personally, it's taken lots of years to accept the fact that, I will miss some of those. But in a case like Amazon, 240 was my price target. And so when was it? It was so this day. So January 17th. This day hits 240 and I got out. As soon as it hit 240, I got out. Huge gain. It was awesome. I think that was like a 60 or 80% gain or something like that. That's a fantastic gain. And get out. Also, you can see the short-term trend line has been broken as well. Kind of poor reaction on earnings. Again, so these oh man, I just way back there. So so until a new trend gets formed, I personally would not go after this. Let's see. The best trades are sort of obvious. And this isn't really obvious any which way. Last week was a pretty bearish candle. So yeah, like I said, this isn't exactly obvious which way. Now, in terms of an uptrend, this is clearly uptrending and it's all good. No harm, no foul, doesn't matter. Oh, there's a longer term trend line. So still an uptrend, it's all good. But like I said, for me and my style, there's not a clear risk to reward. And not something that I would be going after here. But in terms of a longer term position, equity position, it's in a clear uptrend, no big deal. Although stochastic is getting down around 20. So, yeah. Okay. So gone over Apple, Amazon. Oh, and before I forget, I want to give another example of where it's good to set your price target and get out and don't care. So Fubo, you guys remember I said $4.50 was my price target, and I think I got in on this day, January 29th. I did. Yeah, this day. Yeah, I remember that because I was adding and then into all this strength, and then as it was really pulling back, I added some more. But anyways, so it hits 450. That was a fantastic gain. And then it's given all that back, right? So again, that's just another example of hitting price target and getting out. Like I said plenty of times, like with gold. For example, it hits my price target, I get out, and this thing goes to the frickin' moon. All right, so there's plenty of times where the stock or whatever you're in continues higher without you, and that's okay. This was still a really good gain. I think I got out in here, and so looking at this sort of kind of hurts, but I said on this day, this is respected this trend line for now, so this could be a good place to get in, and not a place that I was going to get in, and we'll see if I was wrong, and clearly I was wrong, right? But you take your gain, you set your price target, and get out, and that's it, right? You look at this more as a game of probabilities in a business. It's not any sort of casino. It's not like a what if. It's not being greedy. It's not about being right, being wrong. It has nothing to do with that. It's just about the probabilities. Okay, so now let's continue Mag 7. So we did Apple, Amazon. Let's look at NVIDIA. I haven't looked at NVIDIA. Man, all sorts of head faking going on in here, all sorts of jockeying for position. Yeah, I would argue this doesn't really look good. That is a little worrisome. 50 RSI. gap to fill, can't even fill it. It's getting stuck at the 50-day moving average. Stochastics in a higher elevated area. Although the higher elevated stochastic doesn't mean too much. So let's look at time on semiconductor. Yeah, and this continues to look the best. AMD just... This is why you never go into anything below the 200-day moving average. You know, I knew all sorts of people trying to go long this around the 120 area, and just no, it's a no go. See this on a weekly chart. You know, it's kind of sort of people like, you know, trying to be a hero, right? And ego trading. But so then let's look at semis here. Yeah, so filled this gap, went way down. So if you're a bet man, the next time it fills this gap, it's gonna, you know, fall. If it can even fill that gap. So, yeah, you know, like this really was looking like it was rolling over, and as of now, it's kind of getting saved. So, there's Apple, Amazon, Nvidia, now Microsoft. Just, again, another mega cap stock with a horrible reaction to earnings. Yeah, just wow. You know, below the 200-day moving average, this is a no-go. 50-day moving average starting to come down. This is a no-go. Now, there is a pretty large gap to fill, but we'll see this again over here with Google, right? Another company and a great base for the most part, although there was some decent selling that I was talking about. But a great base, horrible reaction on earnings, right? Another anomaly that I was in, and I'm still in these debit reds, but they're worthless now essentially. So it doesn't matter. They'll just expire worthless most likely, unless something miraculously happens and they can fill this gap here, but in a short period of time. But there's this gap to fill down here. Man, I feel like I've been talking about gaps so much lately, and it's really quite annoying when there's all these different gaps, you know. So, and hey, that's the market that we're in. Google, you know, again, I mean, this is one of the most amazing companies in the world. So, you know, clear uptrend below the 50-day moving average, so that's a no-go, you know. You could use the 50-day moving average as a guardrail and you'll be protected all the time. So, you know, here, right, where it did kind of go up and down, up and down, up and down, up and down, but, you know, if every time below the 50-day moving average you were out, or you could use a 21-day or anything. It's just in any sort of, or the 9-day, just any sort of rule that protects you on the downside is what is important. You know, whatever it is, it doesn't matter. Everyone's different. Everyone's got their own strategy. But for me, the 21-day EMA is what I use the most. 50-day moving average is almost the end-all be-all. But the 200-day moving average is the end-all be-all for me. So for me, this is just, would be a no-go. So now let's go over to Meta. Meta continues to just kick some serious butt. You know, again, though, where's the risk to reward in here at this point? So there's that. Meta I think that's Tesla. Man, Tesla's really been underperforming. Wow, 6.3% today. This is just a nosedive. Again, this is why rules are important. Now, maybe if you're just a type of person that will turn the computer off and look at this in a couple years, then this that it doesn't it doesn't matter. But that's not the way that I trade, and so anyways, yeah. So this trend line that I drew here, anything below that was a no go. It respected it and got rejected right off of it. That was a no go. This was also a weird one. Really strong day on this day. Then the next day was really not strong. It looked so good, and I was so excited. And then the close, I said on that day, man, that was a really weak close. And then the very next day, massive gap down, and then, I just get out. Right? I mean, like I said, there's so many anomalies that have been happening in this market. There's so many things that have been failing. And Tesla's just another one of them. Just like Russell, just like, man, everything Google, NVIDIA, just, man. I mean, Microsoft, although Microsoft had been the weaker of the mega tech companies, so mega cap, so it's not terribly surprising where if one of them is going to fail, it would be the weaker one, but still. So let's see this on a weekly chart. Oh, that's quite remarkable. See this on a monthly chart. Yeah, just Tesla doing Tesla things. I don't know. Just up 1,000,000%, down 1,000,000%. Probably in a month it'll be up 1,000,000%. Who knows? All right. Okay, so that's it for Mag 7, I think. I feel like I always miss some, but whatever. So that's it for Mag 7. Let's go over some sectors here. Maybe not too many, but again, financials continues to look the best. Let's look at a couple of the larger holdings in this. So we'll first look at the largest, which would be Berkshire Hathaway. Wow, this is some sort of box. And continues to show strength. JP Morgan. Look at this. This is just wow. Let's look at Goldman Sachs. Yeah, just, man. See, here's another thing. Okay, so I was in Goldman Sachs since forever, and maybe since the summer or prior, something like that. Yeah, I think the summer. Yeah, right in here, 459. And I'd given it some leeway in here. And then I gave it some leeway in here because of this gap to fill. But then on this day right here, I get out. And for a really good gain, like it was like 25% or something along those lines. And here clearly I was wrong. And this just continued to kick serious butt. Huge gap, man. Awesome. So there's still so much money chasing after financials. And, so I was wrong here. But if I'm wrong and still trading my plan, protecting on the downside and making money, then it's that's what you want, right? That's what that's the goal. So then let's go over Visa. Wow, that looks good. Just, man, see? Things are still really rocking. This is the all-time weirdest. MasterCard kind of consolidating here. Wow. JP Morgan, let's look at Wells Fargo, Bank of America. Wells Fargo looks fantastic. Bank of America. Kind of consolidating. We'll see what happens. And that's it for financials that I would want to look at. Let's look at industrials now, go through some sectors and call it a day. Cool. Industrials is looking okay. It's looking like it's trying. Did I miss out on this? Nah, I wouldn't have gone after this here below the 50-day moving average. Yeah, so again, I mean, there's things that are trying that could maybe work, right? You got this gap to fill again. Talk about that. It's like a broken record. Around 140, 141. But industrials are looking like it's working, which would be good for our friend Dow. Caterpillar train. Whoa. Yeah, see, train looks all right, Nice. Wow. Really good volume. Huh. Yeah, I mean, this is a clear risk to reward, and sometimes you got to take what the market gives you, right? So, I mean, this looks really good to go after, sort of. You got 370 would be a really conservative area, so it's like 6, risking 4, 5, which is not enough. Could you squeeze any more out of this? You definitely could. So train looks good. Train looks good. All right, let's go over to materials. That's no go. Let's go over to real estate. I think it's looking okay. Yeah, this looks okay. You gotta. I would not go after any of this at all right now until the 50-day moving average starts kind of cruising back up, right? Because another example of this kind of same scenario would be kind of right in this whole area, right? Like this all kind of looks identical to here, similar. And then again, I mean, same thing over here, right? You don't go after it right away. You wait for the moving averages to catch up and start turning up, right? You get all sorts of chopped up in here. And then as they're kind of turning up and moving up, respecting the 50-day moving average over the 21-day moving average, you jump on it and wow, did that rocket higher. So again, and who knows, maybe I will completely miss this and that's a completely wrong take and I'll go up to 44, 46, right? And you just completely miss it, but that's okay. There's a million things to go after. It's just a game of probabilities. That's all it is. And the probability is higher that before this rockets higher, there'll be all sorts of chop and pull back as these moving averages start converging and moving up. So that's what I'll be looking for. Consumer staples look pretty good. Whoa, really strong day today. I was looking at this in the morning. But again, same thing. As these moving averages kind of start catching up and moving up. But yeah, consumer staples look pretty good. Let's look at biotech. How's biotech been looking? Horrible. Yeah, again, below the 200-day moving average is a no-go. So that looks horrible. Let's look at healthcare. Not good. Although I could see, I mean, if this does respect this 21-day moving average here, the one in blue, and like the 145 price target, maybe like a shakeout below and back up, I could see this working out. But again, below the 200-day moving average is 100% a no-go. So then we looked at utilities. Honestly, I don't know if I've ever gone long utilities. I don't think I ever have. Communications rocking, right? So there's things that are working, a little bit less conventional, like utilities, consumer staples, financials to some extent you could say is less conventional, but not for me. I definitely go long financials all the time. That's something that I look for a lot, but I don't know how common that is. That's it. Now let's look at China. Over the weekend, I was thinking, man, I need to go long Alibaba. And was it Monday? They were already up 4%, you know? So, yeah. Then that's it. But, so there's things that are working. That's my whole point. And again, it's the weirdest market. But so Alibaba, China's looking okay, right? You've got Japan that is, 100% on board with the U.S. now in terms of investment and trying to work together. And so who knows, maybe Japan could start working again. But my goodness, this is insane. I mean, yeah. Again, just a reason as to why like setting price targets is important. Because yikes. All right, let's look at silver. We looked at gold. Let's look at silver. Wow, really interesting day today. Again, I think silver, this could definitely work. I mean, maybe give it another day or so and maybe down here at a 40 stochastic, something like that. Or if you wanted to play it below 32, you could get out. Yeah, this is looking really good. Again, here's another example of price targets. I feel like there's not much to talk about, so I might as well talk about what we can. So again, my price target was 33-ish, kind of like right in this area, so a little bit less than 33. So I was in this, you get out somewhere on this day, one of these. Somewhere around 33, get out, and that really nice gain. Nothing insane, but like a really nice gain. And now just wait for another opportunity. And man, I would have given back all that money that I made. Was that like a 40% gain or something? That would have all been gone. I mean, they'd probably still be up. Those calls would probably still be up, but not up 40%. So we'll wait on these. I can see silver working again. The problem is silver works when gold works, and gold is really stretched up here. But man, look at this gold just. This is something I've been watching this level since forever. And finally gets above it. Man. This is the all-time greatest looking chart of all time. There's never been a better looking chart than gold chart on monthly. I mean, look at this. This is the most massive cup with handle of all time. So, yeah, it's no surprise this thing's just rocking. All right, guys, I will catch you all on the flip side.